All right. Thanks for registering for my course, Self-Employed Mortgage Solutions. This is something I'm really passionate about. I've got a lot of friends that are self-employed, and they're some of the best people that we deal with. And I'm telling you, if you've ever had challenges with the bank and getting an approval, you've come to the right place. We're definitely going to help you out here today. So, have you ever thought or been told any of the following? I can't get a mortgage because I'm self-employed. I can only get a high interest private mortgage. I don't have any mortgage options, or my accountant did my taxes wrong and now I don't qualify. We hear that one all the time. Your accountants are your friends. Your accountants are doing a great job. Their job is to help pay less money in taxes for you. There's a lot of programs out there that they know about, and their job is to help you save on taxes. Our job as the mortgage professional is to help you get the right product and help you get financing. In the end, what we want is we want money back in your pocket. We want money back in your business. We want money going back to your family. And if we can work together as a team between myself and the accountant, we can help you do all of those things. And it's not that the accountants are doing a bad job. So, Statistics Canada estimates that 2.9 million Canadians are self-employed. Self-employed workers make up 15% of the total employment, which is up 12% from 2 decades ago. Why does that matter? We'll get into that in a little bit. So, about me, who am I? I'm Adam Walker. I'm your friend in the mortgage business. I've been doing this for a long time. I spent a lot of time at the bank, declining self-employed people like yourself. In 2023, I decided to come out on my own. I wanted to start my own. I wanted to be able to help more people. So I started my own thing, and that's where I've been here. I've partnered with some great people, like great accountants, great realtors, to help you through this process. And we've built an easy, done for you service to make sure that this is easy, as stressful free as possible. So now, what's a mortgage agent? How is a mortgage agent different from the bank? So we get paid by the lender. That's, like I said, one of the things that we've been told all the time is that, working with a broker is expensive. We get paid by the lender. We're not charging you directly. We have access to more lenders. We have more programs and products. We have more interest rate options, and we're qualified experts. Not only qualified experts, we work with great lenders that have qualified experts working for them. Here's some of our featured lenders, and there's more and more being added all the time. I work with a lot of the top mortgage companies in Ontario. My clients benefit from these relationships that I've built, and it makes it a true one stop experience. So we hear all these statements all the time. Banks are the only place to get mortgages. If your bank declines you, there's limited options, and really, if your bank declines you, you don't deserve a mortgage. We've also been told that B lending options, they're very limited. But I'm going to tell you, the truth is there's more and more self-employed people every single year. There's lots of options, but planning and having the right team in your corner are going to be key. So where did all these B lenders come from, and why are there so many new B lenders? Well, it's harder to qualify every single year. There's more and more contract. There's more self-employed. There's more temporary workers. The government stress test came in. That made things a little bit harder to qualify. A lot of these lenders, they looked. There's great clients that are out there that can't get approved. So there's more and more B lenders all the time. They're launching new alternate lending arms to give you more and more options every single year. And the benefit of working with a broker is, you might not fit under just one. If you go into Scotiabank, they might have a program for you, or they might not, depending on what they have this week, right? Like First National, there's all kinds of different lenders. They all have different guidelines. They have all have different options to get you approved. And when you work with a broker, we can take it to every single one to find you the best option and the best rates. So many mortgage programs for self-employed clients. So let's talk about some of the programs that we can do and some of the ways that we can get you approved. We have options to lenders who can get you approved in less than 2 years financials. We can write up your income. So we have stated income programs. So if your 2 year average is really, really low because your accountant's done a great job, we have stated income programs that help you get approved with a higher number. We can use some of those retained earnings as an asset. We can add some of those back into your income. We have access to high net worth programs. So if you're saving a lot of money in your business, but keeping a lot of very, very low income, we've got access to some of those programs. We can qualify using your bank statement. So we have stated income programs through the income that just comes into your bank statement. So we can use your last 6 months, your last 12 months bank statements, and get you approved that way. Now, it's important to understand your options, right? So we have two simplified options: A lenders, which are like the banks, and B lenders. Those are the alternate arms. So A lenders, like I said, they treat your income like an employee, they like any T Ford employee. They offer the best rates. They do offer lower fees. They are a cheaper option that way if you are claiming a high income. Now, the B lenders, they look at self-employed just a little bit differently. Now, the downside of those, there are going to be some higher rates and lender fees, but we're going to jump into a case study and we'll show you exactly what the difference is and if you could still save money working with a little bit higher interest rate. So we've made up two people here. Well, not made them up. Or Mike and Miley. Anybody that knows me, Mike and Miley are my two kids. So Mikey, he's going to be a chiropractor. Or sorry, Mikey's not going to be a chiropractor. Mikey is going to be a contractor. Let's say Mikey's incorporated and he wants to buy a house. Miley, let's call her a psychologist. That's what she wants to do eventually. Let's say she's sole proprietor and wants a house with an A lender with the lowest rate. So let's break in and let's look at what this would be hypothetically for them. For those that don't know, Mike and Miley are still in high school. Neither one of them are working right now, and this definitely isn't a real scenario. It is, these are scenarios that we did take. We took these to an accountant to say, what are some tax options? How can these taxes be looked at? So let's look at what this would look at from an income tax perspective. So let's say they both have a gross business income of $200,000. Miley, because she's a sole proprietor, she's paying personal income tax. So she's at 30%. Her personal income tax is $44,000. She's paying a higher CPP at $5,800. Her net business income is $150,000. She's not paying corporate taxes because she's not self-employed, or she's not incorporated. But the total amount that she's paying to the government every year is $50,000. Now, Mike, on the other hand, he is incorporated, so he's not paying himself too much. His personal income tax rate's very low. He's not paying any CPP. His net business income is high, and he's paying a corporate income tax rate at around 15%. The corporate taxes that are going to be paid are about $22,500, and the total money that he's paying to the government is going to be $22,000. You can see here that Mike's definitely going to be saving money. Again, these are hypothetical solutions. We work with an accountant to see exactly what your best options are. Like I said, the disclaimer here: I'm not an accountant. I don't claim to be. I don't want to be. These are estimates from some of our friends and some of the partners that we work with, in terms of what the numbers can look like. Now, one of the things to remember here is when you look at the two different taxes, the amounts paid to the government for Miley, that's just going to be times two, because in a lot of years we need 2 years in a row to qualify, if you want the lower rate. So that tax bill that she's paying there is actually going to be double. Now let's look at down payment. So what does Miley need for a down payment? Well, so she's going to be treated like anybody that's any typical borrower. So she needs 5% of the first $500,000, 10% for any funds between 500 and $1 million, and 20% for anything over $1 million. Mike, on the other hand, he's just going to need 20% down. So any marketable residential home, we're going to need 20% down for. So how much do they qualify? Mike, actually, because we have some different stated incomes, qualifies for a little bit more house. Again, that comes with a higher mortgage payment, but he does qualify for a little bit more house because of the way that income is structured. Now, when can they buy? This is a really key one because you never know what's going to happen in the housing market. Mike, because we have stated income programs and we have alternate lending programs, Mike can buy within the next 6 to 12 months. Miley, however, she might have to wait 2 to 3 years before she can buy because, like I said, we have to have those 2 years financials. And unfortunately, the day you get your second year prepared usually isn't the day that you're looking for a mortgage. So that's going to take a little bit more time until that's done. But let's say they both buy a $700,000 house. They're both getting a $700,000 mortgage. So Miley has no lender fee. She's getting a little bit lower rate. Her amortization is locked in at 25 years, and her monthly payment is going to be $43.58. Mike, on the other hand, his interest rate is going to be a little bit higher. He is going to have a higher lender fee. So he's going to have a broker fee or a lender fee of 1%, maybe 2%. Now he can stretch his amortization out. We do have 30-year options. There's even some 35 and 40-year options, depending on the property, and what the application actually looks like. That's going to leave his monthly payment a little bit lower. We have options for lower payments, but we also have lenders that have options depending on what your type of business is. Maybe you get paid in lump sums all the time and you want to make lump sum payments, more often. We have lenders that will allow that. So we want to make sure that we're finding you the right product. Interest rate isn't always the most important thing, but making sure we can make those payments, that's most important to you. Now, one of the things to consider is how much our housing price is going to increase in that 2 years that Miley has to wait. She doesn't get to buy today. Mike gets into the market right now. He's building equity. The other thing to consider is what if this changes in the next 2 years that Miley has to wait? So government regulations, things like the stress test, that could change. Interest rates could go up. Lender preferences. So Miley wants to go with a bank. The banks could decide that they're just not going to lend to self-employed people the same way they were before. So there's a lot of different options out there. And what I can say is, self-employed people, you can either be Mike or Miley. If you want to work with the A lenders, there are lenders that will work with you. We do have options for you if you want that A lender. If you want the B lender, we have options for you either way. Like I said, by working with a mortgage agent, you have access to the right guidance. We can make sure that you're structured properly, and we want to make sure that time is on your side. So if you plan ahead, work with a great team, we can help get this done for you and help make it work. Let's connect. The next page is going to have an option for a strategy call on the next lesson. There's an option there to get started. We can get your mortgage application started right away. If you have questions, give me a call. Let's chat. I look forward to helping you through this. And thanks again for signing up for my course.